There are these companies that work completely behind the scenes. They're the ones doing the heavy lifting, the real nuts and bolts that power a country's biggest ambitions. They're not household names, not by a long shot, but without them, the whole economic engine would just stop. Today, we're going to pull back the curtain on one of these crucial players.
Because, really, it all boils down to this. When a country like India decides it's going for massive growth, the first very question you have to ask is, where's the power going to come from? And the answer to that question, well, that's where we find an absolutely incredible story. All right, first things first, we've got to get our heads around the big picture here. We are talking about a literal tidal wave of investment and change that's sweeping across India's entire power sector. This isn't just a small ripple, it's a massive foundational shift.
Just try to wrap your mind around this number for a second. 500 gigawatts. That is a staggering amount of new, clean energy that India is aiming to bring online by 2030. And to make that happen, you can't just plop down some solar farms. You have to build the entire circulatory system to move all that power from where it's made to where it's needed.
And boy, is the money flowing to build that system. Look at this. We're talking trillions upon trillions of rupees in what's called CapEx, or capital expenditure. All of it is earmarked for everything from massive transmission lines down to the local grids. And you throw in the fact that power demand itself is set to practically double, and what you get is a perfect storm of opportunity for any company that builds this critical infrastructure. So, the big question is, who's actually building this future? Let's zoom right in on a company that's sitting directly in the eye of this storm, Terrell. Think of them as one of the essential gatekeepers for the entire grid. Okay, before we go any further, let's get a handle on what these guys actually make. A transformer, think of it like the indispensable traffic cop of the entire electrical grid. Power gets generated at a crazy high voltage, right? But you can't plug your phone into that. A transformer is the device that steps that voltage up or down, managing the flow of electricity safely and efficiently all the way from the power plant to your outlet. And Terrell isn't just any manufacturer. Nope, they are a major leader in India with a solid 8 to 10% of the market. But here's their real edge, their superpower, if you will. They can build the really big stuff, the massive high-voltage transformers that are absolutely essential for the kind of national grid expansion we were just talking about. So, we know what they do, we know why it's so important. Let's look at the results. And this, my friends, is where the story gets really, really good. I mean, this is the good news section, and trust me, it delivers. Let's just kick things off with their top-line sales. In the first quarter of fiscal 26, their revenue just exploded, up more than 64% from the year before. That's the kind of explosive growth that shows you they are absolutely capitalizing on that massive demand we saw earlier. And if you thought that was impressive, take a look at this. Their profits didn't just grow, they went stratospheric, up 235%. Just let that sink in. That's like your annual salary more than tripling in 1 year. It shows they're not just selling more, they're doing it in an incredibly profitable way. And listen, this isn't just a one-off good quarter. The company has a locked-in order book of over 5,200 crore rupees. What that means is they have nearly 2.5 years of work of revenue already secured for the future. That kind of visibility is just incredible. It gives them so much stability. So, when you put it all together, what does it look like? Well, the source material we're looking at analyzed 51 different financial ratios, but we can boil it down to this simple report card. And just look at these grades. Excellent on liquidity and solvency, which basically means they are flush with cash and have more cash than debt. Then you have good profitability and good efficiency. I mean, this is the financial profile of a seriously healthy, well-run machine. This quote from the report just nails it. It sums up the whole story perfectly. Terrell has fundamentally changed its DNA. It's not just some cyclical business that's at the mercy of government spending anymore. No, it's become a cash-rich growth machine. Okay, a fantastic company, in the perfect industry, at exactly the right time, with amazing financials. It all sounds perfect, doesn't it? Maybe a little too perfect? And that brings us to the billion-dollar question. So what's the catch? Come on, you knew there had to be one, right? In the world of investing, there is always a catch. The market is smart, and it doesn't usually leave a story this perfect just lying around for cheap. And here it is, the price. Take a look at the price-to-earnings ratio. It's just a common way to see how expensive a stock is. Terrell is trading at a PE of over 70. Its competitors, their average is around 36. That means investors are paying a huge premium, nearly double, for a piece of Terrell's future.
And that high price creates this classic debate. You've got the bulls, the optimists on one side saying, hey, the opportunity is huge, the company's a rock star, it's worth the price. But then you have the bears, the pessimists, on the other side saying, whoa, that sky-high valuation is a massive risk. It leaves zero room for error. Any little stumble could send the stock tumbling.
And the financial report we're breaking down is pretty blunt about this. After giving the company all these glowing reviews on its health and growth, it slaps the valuation with a score of just 5.8 out of 10, and it labels that score poor. The price is the problem.
So how do we square this circle? We have an amazing business on one hand and a really daunting price tag on the other. Let's dig into the final analysis from the source material and see how it weighs these two big opposing forces.
The report's logic flows through these 4 steps. Step 1. Acknowledge reality. The business is excellent. Step 2. Also acknowledge reality. The valuation is a huge risk. Step 3. But the conclusion is that the long-term growth story is so powerful that it's worth taking that risk. Which brings us to the final step. 4. A buy rating. But, and this is a huge but, it's for long-term investors.
The report even puts a number on its optimism. In its best case, or bull case scenario, it sees a target price of 625 rupees in the next year. That suggests that even from this high starting point, there could still be more than 20% of upside if things continue to go right.
And this timeline really drives that key point home. This is not a get-rich-quick trade. The analysis is very clear. It recommends a 3 to 5 year time horizon. The whole idea is to give the company enough time to grow into that high valuation and to ride out any bumps in the market along the way.
And so, that leaves us right here, with the central question of this whole analysis. Terrell is, without a doubt, a hidden engine helping to power India's future. The numbers don't lie. It's a financial powerhouse. The market knows it and has priced it for perfection. So the real question you're left to wrestle with is, when a company is this important, what price is too high for a piece of that future?